Hello, everyone. Thank you for checking out Move to Vancouver's Vancouver real estate update. And so I'm going to be talking about what's been happening in the last month, what's been happening in the last few months even, and talk about the local factors of the Vancouver Metro real estate market, as well as some national and macro factors that are influencing what is happening on the ground here in Vancouver. So let's jump right into it. February sales were down. There was only 1,648 transactions homes sold in the month of February in the Vancouver Real Estate Board. Now that's a 9.8% reduction compared to February of last year, and it's nearly a 30% below the 10-year average. And what you can see here on the graph is, other than the dip in COVID, we're near all-time lows of the long-term 15-year trend here for our residential sales in the month of February. This one, the graph shows provincial again. In the Vancouver Real Estate Board, it mirrors the same kind of results. Now, new listings were down in the month of February, so that kind of gives you a little bit of hope. But the next slide we'll talk more about the ongoing listing load. But for new listings in February, listings were down 6.4% year over year. Now, what we're seeing is a big listing inventory buildup. And so in the Vancouver Real Estate Board, there was 13,545 active listings. And provincially, you can see on the graph that there is a ton of listings in each real estate board. For Vancouver, the 13,545 active listings represents a 6.3 increase compared to last year and represents a whopping 37% above the 10-year average. Sales to active ratio for detached was 9%, for attached product was 16.6%, and for apartments was 14.1%. So keep in mind, balanced markets typically are when there's a sales to active ratio between 10 and 20%. But I would argue that our reality is worse than this. Our reality is more into a buyer's market, because the reason we remain in a balanced market, I think, is because the low number of sales. And the majority of sales that have been happening have been the really well priced, really good product, and there's a lack of buyers and there's a lack of activity. And so if more sales were happening, I think it would show that we're more into a buyer's market. The benchmark price. All right. So if you mix all the properties together in the Metro Vancouver area and you pulled out one, the average price would be, that's the average BC price, provincial price in BC is $1,100,300. That is down 6.8% from last year. In the Vancouver Real Estate Board, the average detached home is 1,835,900, which is also down 8.8% year over year. For apartments, the average price is 708,200, which is down 6.8% year over year, slightly up from January of this year. And for townhouses, the average price is 1,046,100, which is also down 5.6% year over year. So across the board, all pricing is down in all categories, both in the Vancouver Real Estate Board and in the province of BC. What we're seeing is not good news for provincial GDP. We have some of the slowest and lowest growth that we've seen in decades. And in the near horizon, there aren't a lot of big projects or big initiatives or tailwinds that are going to change that. So, it's an interesting year that's shaping. Construction overview. So this one's interesting. So housing starts are down and housing under construction are up. Now think about this a little bit. So housing under construction would be any home that is framed in and that they're actively working on it. And those are way up in the province because a lot of developers are slowly working on finishing all that inventory that was sold 5 years ago. A lot of that is being completed at less market value than what it was pre-sold at. And new starts are low because developers aren't starting projects right now if they can help it in many categories because they can't sell them. And so that will create another a disconnected market in probably 4 or 5 years again, because then we'll have consumed the inventory that's completing this year and next year, and that we'll have a shortage in 2030, 2031. Very interesting to see that disconnect between completions and under constructions. And also interesting is the months to complete has dramatically increased. In BC, actually the most for Canada. And again, I attribute that to developers slowing down the pace of work because they're trying to get through this sideways market that we've been in since, you know, since like late 2022 when the market's turned. Rentals have continued to go down since January of 2024. So for the last 2 years, provincially, across the board, rents are going down. And it's much easier finding a good rental right now than it was a couple of years ago. And let's talk a little bit about national numbers and the macro factors that are influencing our local market. Discount mortgage. So right now, the 5-year fixed and 5-year variable are in that in the mid fours. And you can see here how they were much lower in January 22, which built up to that very, very busy market we had. Again, April 2022 was the high watermark in price and activity. And then the rate started going up, it slowed down, and we've been trending both down on interest rates for the last little while and on prices. The current overnight interest rate is 2.25. It's been like that for several meetings. You can see here it's well off the high of 2024, and yet even at this lower mark, it isn't stimulating buyers dramatically currently. We just had a really good month in unemployment, which brought unemployment down to 6.5% in Canada. We were trending much, well, not much, but we were trending higher there for into late last year. We'll have to see how that continues, as there are obviously a lot of industries that are affected by the tariffs and other macro factors that are happening in the world right now. Our growth rate is dismal. Our growth rate in Canada is 1.6%. The average between 1962 and 2025 was 3%. So we're half of the average right now. And again, the horizon for a lot of growth in Canada's economy is not that amazing. And so it really will be interesting the balance of the year and the next few years ahead, what happens. Canada business confidence, however, is fairly stable. It's above average, and so the employers out there are feeling confident that they will be able to keep business moving forward. Canada inflation rate remains in check. It remains at 2.3%. It's below that 2.5 threshold that the Bank of Canada wants. And so that will probably be affected, though, here now with oil prices going up since the war in Iran started, depending how long that is and how much oil is delayed going past the Iranian water through the straits. With 25% of the world's oil passing through that inlet, it will have an impact on oil prices, which will increase inflation in the months ahead, probably. This is interesting. Canadian gross debt. So if it's pretty scary, if you look since 2020, we've really ramped up our debt. Before that, our average debt to GDP was around 80%. So that means for every dollar the Canadian government makes annually, it has 80 cents of debt. We now are about $1.12 of debt for every dollar we make. So we have more debt than we can generate in GDP a year. And that is going to be something that really will be interesting in the future on how it's dealt with, because there seems to be a lack of appetite to balance the books and rein in spending. And it's more of a delay mechanism, hoping that someone else will have to deal with it. All that being said, you've heard a lot with NATO and all the other influencers at play, America, etc., asking us to get to that 2% of GDP spending on the Canadian military, which is actively happening. It's been happening slightly since 2017, where we're starting to rebuild all the different sectors of the Canadian military. I definitely think there's a lot of opportunity in that industry in the future for Canadians to find employment, but you can see here spending continues to ramp up because of that. So, conclusion, if you're a Vancouver buyer or seller, how does this impact you? Sales remain below long-term averages, but fewer sellers are coming to the market at the moment. If the spring demand picks up, we could see inventory levels stabilize with more sales, and prices could hold closer to the current levels. However, if buyers do not come back into the market in greater volume, prices will continue to drop in 2026. So the next 2 months of activity and the results that it generates will tell the real story of where 2026 is going and how it's going to finish. If I can be of any help to you watching this video as a realtor, helping you navigate the buying and selling process, please reach out. And as well, please leave your comments and subscribe to the channel. I'm always appreciative. Thank you.